Are we live?
Yeah. Good evening, friends. This is C.A. Sangam Agarwal, and I welcome you all the participants in this session. And this is another session of on Ind AS. As you know that we have already conducted a fourth session on Ind AS. If you want to watch the sessions, you can go in our playlist in the YouTube channel, and you can find all the recording of the all four sessions. So, friends, today we are going to cover Ind AS 14, Ind AS 16, which talk about the property, plant, and equipment. Basically, it is something like as we have earlier, like Schedule 6 for the depreciation and accounting for fixed asset. It is similar to that Ind AS 16. And today we are covering another Ind AS 40. That is basically investment property. The property which we generally held for the purpose of investment, getting rental income and price appreciation. So, friend, today in today's session we will mainly discuss about Ind AS 16 and Ind AS 40. So, we will not take you much time. Just giving you a brief about Chandni ji. CA Chandni Gupta is a very learned speaker on Ind AS. She used to take many sessions with the other platforms also, including us. She used to take session on the leases with us, and she's generally taking session with the online platform. And recently, she's also co-authored one book with the C. Alogar. Am I right, ma'am?
Yes. Treatise on Ind AS.
Yes,
This
yes,
was the
and
name
I
of.
also saw that book on Facebook. So she has a very depth knowledge, and currently she's involved in the company about implementation and the preparation of financials based upon the Ind AS. So she has a very good and practical knowledge on Ind AS, and in very little time in the of post qualification, she emerged himself as one of the very good faculty in the market on Ind AS. So once I will not give you her more introduction because I personally believe a speaker give his intro itself by giving his session. So friends, might be I am sure that at the end of the session you will definitely feel whatever I said about her is she's deserve more intro whatever I've said. So friends, I will not take a much time. I just request you friends, kindly you can ask your questions in the comment section. We will try to take care all the questions at end only. And friends, apart from that, the today's PPT will be available via link in the comment section. So you can download post session directly from the comment section. Apart from that, friend, I request you kindly subscribe our channel and click on the bell icon so that you can get the information of upcoming sessions, and you can also enjoy some session which is already recorded at our YouTube channel. So we have more than 60 sessions there, and we have also planned some very good sessions for you in coming days. So don't miss that by subscribing our channel. And CA Chandni Gupta is also running one YouTube channel. What is name of that?
IFRS World. IFRS World.
IFRS Word. So friends, I also request you kindly subscribe that channel also so that you can get the precise knowledge of Ind AS. She's also recorded many videos on the Ind AS. So if you are keen interested in Ind AS, and somehow Ind AS is the future of Indian accounting, so it is better for all of you to kindly go to that YouTube channel also and subscribe. I will also give you in the comment section the link of such channel so that you can also visit that channel also. So I will not take you much time and invite our today's speaker, Sri Chandni Gupta, to take this session forward. Over to you, Chandni.
Thank you so much, sir. Thank you for the lovely introduction, and thanks for having me. It's always a pleasure to share Ind AS knowledge with the viewers at your platform. So I will not take much time and quickly share my PPT. Yeah. So, friends, today we are going to discuss Ind AS 16 and Ind AS 40. So, these two standards are most commonly used standards. Why? Because these are related to assets. Assets, in particular, tangible assets. So, there are two types of assets, tangible assets and intangible assets. Tangible assets are those which have some physical form, right? We can see, touch them. But intangible assets are those which do not have a physical form. For example, patents, copyrights, trademarks. So there is a separate standard for that in Ind AS 38, intangible assets. So today's session is all about tangible assets. Now there are two standards given in Ind AS. Ind AS 16 for property, plant and equipment, and Ind AS 40 for investment properties. So first of all, let's understand what are these Ind AS. Right. First of all, let me give you a quick overview about Ind AS. So basically, Ind AS are Indian accounting standards. And yes, these are different from the accounting standards that we used to apply earlier. As of now, there are two set of standards applicable in Indian accounting. One is accounting standards, which is now called as IGAP, Indian GAAP. Right. These are the accounting standards which we have been learning from inception. And second set is Indian accounting standards, which were notified on 16th February 2015. So on 16th February 2015, MCA notified 39 Indian accounting standards. These accounting standards are based on international financial reporting standards. International financial reporting standards are issued by an international accounting standards board. Right. So basically, IFRS are globally accepted set of accounting principles. And we, India, has converged with IFRS, not has adopted IFRS as it is, but we have converged with IFRS and we have developed our own accounting standards, which are on the same lines as IFRS, but there are some differences, like some carve outs and carve ins. Right. So all in all, we have two set of accounting standards prevailing in this country: accounting standards and Indian accounting standards. In short, we call as Ind AS. So when we talk about tangible assets, in Ind AS there are two standards, Ind AS 16 and Ind AS 40, that we are going to talk about in today's session. But when we talk about IGAP or AS, there is one standard, AS 10, right? So there is also a history connected with that. Earlier, there used to be two standards, one for depreciation, AS 6, and another for fixed assets, AS 10. But on 30th March 2016, MCA notified amendments in accounting standards. And in that notification, AS 6 was deleted. So basically, accounting standard for depreciation was deleted entirely, and a new accounting standard in place of AS 10, a revised AS 10 was introduced. This AS10 is on the same lines as Ind AS 16. So as we speak, Ind AS 16 and AS10 have no major differences. So if you are watching this session today and you understand Ind AS 16, please understand that you have also gained knowledge for AS10. And what is the penetration of Ind AS? As of now, all the listed companies and all the unlisted companies having net worth of 500 crores or more are applying Ind AS. And their parent companies, associate companies, JVs, subsidiaries, all these companies are applying Ind AS. Right, so there is a huge chunk that is applying Ind AS, but also since there is a huge chunk that is applying IGAP, so it is very important to understand both the standards and what are the difference between both these standards. So in IGAP, there is AS10, and for investment property, in Ind AS, there is a separate standard, which we are going to discuss today, Ind AS 40. But in case of IGAP, there is no separate standard for investment properties. AS 13, which talks about accounting for investments, has a guidance for investment property in that standard. Right, so I hope the overview is clear to everyone. Now we will proceed to discuss what is Ind AS 16 and what does Ind AS 40 talk about. So first of all, it is very important to understand what is PPE, first of all. So basically, PPE are the tangible items, as we just discussed. Second is, these are the assets. These are the tangible assets that a company has held for use in production or supply, or for rental purposes or for administrative purposes. For example, the company has a plant or a machinery to produce some goods, right? So that plant or machinery is a PPE for the company. Or there is a car, a vehicle that the company is using for rental purposes. It gives that car on rental purposes, right? So that car is also a PPE. Or for administrative purposes, suppose the company has an office building. Office building is used for administrative purposes. So that is also a PPE, right? And all these assets are expected to be used for more than one period. By one period, we generally assume that it is a period of 12 months. So PPE are tangible assets that are held for use in production or for rental purposes or for administrative purposes and are held for more than one period. Right. Now, when I talked about held for rental, I did not use an example for building or land given on rent, right? Why? Because the land or a building that has been held for rental purposes is classified as investment property. So there is the difference. PPE includes all the assets, including land and building, which are held for production or for administrative purposes. But when we talk about rental, land and building are excluded from PPE and those are included in investment property. So this is the major difference between PPE and investment property. So as we all know, all the companies have assets, right? So these property, plant and equipment are generally with all the companies, like uh, building, plant and machinery, car, office equipments, AC, computers, furniture, fixtures. These are all property, plant and equipment, which are covered under Ind AS 16. And as I told you, investment property is nothing but it's a property, a land or a building or both, which is owned or held under lease as an ROU asset. Now let's understand this. So basically, a property or an asset can be owned by the company or it can be held by the company as a lessee. Right. So Ind AS 116, which talks about leases, specifically says that when a lessee has taken any asset on lease, it will recognize an ROU asset, which is a right of use asset. That asset will be classified as PP or investment property depending upon the nature of it. Right. So when a company has held that asset for under a lease as an ROU asset, in that case also it can be an investment property because the company is recognizing an asset in its balance sheet. On the other hand, if the company has given an asset on lease, right? So now we will need to understand a little bit about 116 here. In 116, it says that as a lessee, a company has taken an asset on lease, it will recognize an asset in its book. But as a lessor, if the company is a lessor and it has given an asset on lease, it will have to see whether the lease is a finance lease or it's an operating lease. In case it is an operating lease, in that case, what happens? The asset is not de-recognized from the books of lessor, right? But in case it is a finance lease, the asset is de-recognized from the books of lessor. In that case, what happens? So when it's a finance lease, the company is de-recognizing the asset. That means the asset is no more in the balance sheet. So it will be construed as a disposal of asset. Right. So we will also understand it later in this session. But for now, you have to understand that if a company has held that asset as an ROU asset under lease, in that case also the asset is classified as PP or investment property. Right. So investment property, it's a land or a building owned or held as an ROU asset for rental or capital appreciation. So basically, these two assets, we will use a term property here to understand land and building. So when a company is holding a property for rental or capital appreciation purposes, then only it will be classified as investment property. In case the company is using a building for its office, right, has an office building, all the employees are sitting in the building, in that case it is not classified as an investment property, but it will be classified as a PPE. So it is very important to understand that only when the property is held for rental purpose or capital appreciation, that means suppose a building is vacant, right, the company is not sure about the use of the that building, in that case also we can assume that it has been held for capital appreciation purposes and hence it will be classified as an investment property. Right, so these are the exclusions, that it should not be used in the production or admin purposes, or also as a sale in the ordinary course of business. So if the company is dealing in the investment property, is dealing in land or building, in that case, what happens? It is not classified as investment property, right? It is classified as inventory. So these are the exclusions from the investment property. Now, there are some examples of investment property. Suppose a land that has been held for long-term capital appreciation, or a land that has the use of which is currently undetermined. So as I told you, any building or any land which is vacant or the use is not determined, the company is not sure of the use of that particular property. In that case also, it will be assumed that it is held for capital appreciation purposes. Right. A building that is leased out under operating lease. So as I told you, if a company has leased out a property on finance lease, in that case, what happens? The asset is de-recognized. So there is no building anymore in the books. But if the building is given on an operating lease, in that case, what happens? It is for rental purposes. The building is still in the books of company, and the company will be earning rental on that building, right? So that will be classified as investment property. So building that is vacant but is held to be leased out under one or more operating leases, that we have also discussed. Property that is being constructed or developed for future use as investment property. So these are the examples of investment property. So I request all the viewers, if you have any doubt, please post on the chat and I will try to answer, or we will take a Q&A session at the end of this session. But let's try to make it interactive. So if you have any doubt, just keep posting. So this also we have already discussed. What are not investment property? The property that is held for sale in the ordinary course of business or has been given under a finance lease, or which is an owner occupied property. So basically the property that is used for administrative purposes or production purposes will be covered under Ind AS 16. So a different term has been used in Ind AS 40 for that, which is owner occupied property. So for those two particular purposes, the property will be termed as an owner occupied property, and Ind AS 16 will be applied and not Ind AS 40. So as far as the application guidance is concerned, as I told you, for PPE in IGAP, there is AS 10. In Ind AS, there is Ind AS 16, and obviously Schedule 2 of the Companies Act, which guides for the useful life of the assets for the purpose of depreciation. For investment property, as I told you, AS 13 provides for guidance for investment property, and Ind AS 40, which we are talking about, and Schedule 2 for depreciation. Now, a lot of people must be having a doubt that how to identify where suppose a building is used for both the purposes. The company is using it as owner occupied property also, but as also given for rent. In that case, how do we classify that particular building? So let's take an example here. Suppose Chandni Gupta has a building, right? And it has 2 floors. The building has 2 floors. First floor, Chandni Gupta is using for its own employees. But the second floor, Chandni Gupta has leased out that particular floor to another company, right? And she is earning rental from second floor. Now, in that case, what happens? Both these floors are separately recognizable, separately sellable, right? So in that case, the first floor will be recognized as PP, but the second floor will be recognized as investment property. But now what happens? There is only one floor in the building, right? And the office floor, there are seats and tables and meeting rooms in the office. Now, Chandni Gupta has 10 employees, say 10 employees sitting in that office. But the majority part of the office is covered by another corporate to which the Chandni Gupta has given that office on rent. So basically, they are sharing the office, but Chandni Gupta has only 10 employees sitting in that office. And the other company having, say, 100 employees sitting in that office, right? So in that case, what happens? The one floor, single floor is not separately sellable, right? We cannot identify as to which part can be given on rent, right? So in that case, it is very difficult to identify whether this particular floor, which has been used for rental purpose also and for own purpose also, will be classified as PP or investment property. So in that case, what happens? The company needs to assess whether the portion that company is using for its own purpose is insignificant, If yes, then the entire floor will be classified as investment property. But if the portion that company is using for its own purpose is not insignificant but is significant, in that case it will have to assess whether it's a PPE or investment property and will be classified as PPE if it is a significant portion. Right. So in my case, since only 10 employees are sitting over there and 100 employees are sitting in the company of the other company in my office, and they are giving me rent, right? In that case, what happens? It's a very insignificant portion of my employee sitting in the office, right? So I will classify that particular floor as investment property. Now, suppose Chandni Gupta has a building and she has given that building to other corporates for office purposes. Now, when someone lease out an office building, it also provides some ancillary services. For example, common area maintenance services or security services, right? So Chandni Gupta is also providing some security services to the corporates in that office building. So this security services and the common area maintenance services are very insignificant portion when we compare to the entire lease part, right? But on the other hand, suppose Chandni Gupta is running a hotel on that building. Now, in that case, what happens? Chandni Gupta is charging the customers for restaurant services, for housekeeping services, for security services, for valet parking services, right? So, and all these services make hotel service as complete, right? Because when you go to a hotel and there are no housekeeping services or restaurant services, in that case, what happens? You don't go to that hotel because that is obviously not the purpose of going to a hotel, right? You need all these ancillary services around, and you are being charged a considerable amount for that, right? So in that case, what happens? That hotel is actually being operated by Chandni Gupta for earning revenue, right? It's not just a rental component that Chandni Gupta is charging for room, but also the services. The significant part of the charges is those services, right? So in that case, what happens? That hotel will be classified as PPE and not investment property. The question that Chandni Gupta is charging rental will not conclude that hotel needs to be classified as investment property, because we also need to look at the ancillary services and how significant the ancillary services are when we compare it to the entire lease part. So when I am managing the hotel in that building, it will be classified as PPE. But when I am giving out that building for lease purposes to the corporates to run an office building, in that case it will be classified as investment property, because because I'm earning rental from those corporates, and the ancillary services are very insignificant part, right? So these are two major points that needs to be considered when classifying PP or investment property when there is a single property. Now we have understood that what are included and what will be covered by these two standards, but needs to understand what is not covered by the standards. So number one is held for sale assets, right? Because this is covered by Ind AS 105, hence these are not covered by Ind AS 16 or 40. Now second is biological assets. For example, wheat farm, right? These trees, grapevines, these are biological assets, except bearer plants. Now, what are bearer plants? Bearer plants are the plants that give produce for more than one period, right? And they are not sold as it is, right? For example, timber trees, right? In that case, what happens? Uh, the uh, the logs are cut out from the trees and they are sold, right? So in that case it is not a bearer plant. But when we talk about rubber trees, in that case it will be classified as a bearer plant, because it is giving me produce for more than one period and will not be sold as it is, right? So Ind AS 41 will be applied on biological assets, but bearer plants on the other hand will be covered by Ind AS 16. Third exclusion is exploration and evaluation assets, which are covered by Ind AS 106, and mineral rights and mineral reserves. So for these assets also, there is one catch. Ind AS 16 says that any asset which is used to develop or maintain these exclusions, right, these assets that are excluded, will also be covered by Ind AS 16. For example, ITC Limited has a wheat brand, Ashirwad Atta, right? So suppose ITC has a wheat farm, right? Now wheat will be classified as biological assets and will be covered by Ind AS 41. But on the other hand, ITC Limited has purchase an irrigation equipment, suppose sprinklers to water the wheat farm. In that case, what happens, that particular irrigation equipment or the sprinkler will be classified as PP, right, and it will be covered by Ind AS 16. So this thing we need to keep in mind, even though the asset is not directly used to give benefits, but even though it is used to develop or maintain these assets which are excluded from Ind AS 16, in that case also that particular PPE will be covered by Ind AS 16. Okay. So spare parts and standby equipments and servicing equipments. So a lot of companies have some spare parts. So when we talk about loose tools, for example, right, in that case, what happens? There is a dual recognition if there is a dual application guidance. First is we need to see if it is covered by Ind AS 16, or if it is not covered by Ind AS 16, it will be covered by Ind AS 2 as an inventory. So when will it be covered by Ind AS 16? When it meets the recognition criteria that is given in Ind AS 16. And what is this recognition criteria? We will understand in the next slide, but I'll just tell you. So spare parts or loose tools, if are used by the entity for more than one period and are held for use in production, which was the definition of PPE, right? If the loose tools are fit in the recognition criteria or the definition of PPE as per Ind AS 16, in that case, what happens? It will be classified as PP. Otherwise, it will be classified as inventory as per Ind AS 2. So for all the loose tools that the company is able to use for more than 12 months or one period, and the loose tools are used in the production or administrative purposes, in that case also it is classified as Ind AS as PPE and will be covered under Ind AS 16. Now, for any asset to be recognized, first of all, we need to look at the future economic benefits. So whether the asset is able to deliver or bring some future economic benefits to the entity. If this criteria is fulfilled, then we will look at the another criteria, which is that cost can be measured reliably. So suppose the company has incurred any cost, right? But whether that cost will be capitalized or will be recognized as an asset, we will have to look at these two criteria, that whether that cost is measured reliably. Obviously, if you have incurred some cost, then you can measure that cost. But also you have to look at the future economic benefits, whether that cost will bring some future economic benefits to the entity. If these two criteria are good to go, then in that case, it will be recognized as an asset. So this is a very important concept, because it will be applied in Ind AS 16, Ind AS 40, even in Ind AS 38. Right. There is some additional guidance in Ind AS 38 also, but these two criteria stand firm. Now, we come to the measurement part, right? Initial measurement of PP. What cost will be included in the measurement of PP? So first of all, obviously the purchase price, the price at which the asset is purchased, and it includes the import duties and all the non-refundable taxes. So basically, if GST is included in the cost of PPE, but the company will get input tax credit of that GST. In that case, the GST is not included in the cost of PPE while capitalizing in the books, right? So only the non-refundable part of the taxes is included in the cost of PPE. Obviously, the trade discounts and rebates are deducted from the cost of PPE. So this is about the purchase price. Second leg is directly attributable cost. Now, what is this directly attributable cost? These are the costs that have been incurred by the company to bring that particular asset in the location and condition which is intended by the management. So basically जिस हालत में वो asset होना चाहिए to make it productive, right, all the cost till then will be capitalized, and it should be directly attributable. That means it should be incurred to bring that particular asset in that particular position. Now, for example, the company is constructing a factory building. In that case, what happens? The salary of the workers, right? The site preparation cost, the freight cost, the installation cost, right? All these delivery and handling costs, these costs are included. But what is not included is advertisement cost or promotional cost, right? Or staff training expenses. So all these expenses like admin costs, initial losses, relocating, or abnormal waste, these costs are particularly not included while measuring the uh, asset at initial recognition. So we have to keep this in mind that advertisement, promotional, training expenses, these are not directly attributable costs basically when we talk about this. So we have to exclude these costs from the initial measurement. Now, third leg is very, very important. So standard says that when you are measuring the asset, you have to include an initial estimate of cost of dismantling. Now, suppose Reliance has got a land on lease from government, right? And it is a contract for 50 years, and Reliance is going to construct a factory building on that particular land. Now, what happens is, after 50 years, as per the agreement with the government, the Reliance has to give back that land after 50 years in the same condition as it was at the inception. That means for the period of the lease, the company will construct a factory building, but after 50 years, it will have to demolish that building. It will have to bring that land in the original position. That means without a building, right? So in that case, what happens? When the company is capitalizing the cost of factory building, it will also include an estimate of cost of demolishing that it will have to incur after 50 years. This is also called as asset retirement obligation by a lot of companies. So the companies are required to include an estimate of the cost that will be incurred in future in order to dismantle or remove that particular asset or restore the site. Right. Now, since this is a future cost, hence the company is required to discount this cost and arrive at a discounted value. Now, at one hand, it will be included in the cost of asset, but on the other hand, a provision will be created. And Ind AS 37 will be applied on that particular provision, and till 50 years, every year interest will be accumulated in that particular provision. And after 50 years, what happens is that the provision will be equivalent to the cost of dismantle that the company estimated at inception. So this is the entire concept of cost of dismantling or asset retirement obligation. Now the question arises, till when the company is required to capitalize the cost, because the construction of a particular asset can go on like for a very long time, right? So when does this capitalization ceases? So there is a very simple answer to it, that the capitalization of cost ceases when the item is in the location and condition necessary for it to be capable of operating in the manner intended by the management. What does that mean? It means that the asset has to be brought to a condition which was intended by the management to bring to be it productive, right, for the intended purpose that was initially estimated by the management. If the asset is in that particular condition, that is the point when the capitalization ceases. So after that point, any cost that has been incurred will be expensed off and it will not be capitalized until unless it meets the recognition criteria. So subsequently, like after the asset is brought to the condition as was intended by the management, there could be some repair and maintenance cost that is incurred. So will it be capitalized? The answer is no. It will not be capitalized, but it will be expensed off. So the day-to-day servicing costs will be expensed off whenever they are incurred. Now, there is a very important concept in this Ind AS about replacement cost of major inspections or overhauls. So, I will take a example for this. Suppose there is an aircraft, right? Now, aircraft has uh, three parts. For example, the body, the wings, and the engine, right? So, the engine, there is a guideline that the engine is required to be replaced after every 5 years, right? Or the company is required to inspect that particular aircraft after every 5 years. In that case, what happens? The cost of replacement or the cost for inspection will be identified by the company and will be recognized separately as a separate component of that asset, and it will be depreciated over the period of 5 years, and after 5 years new or fresh cost will be capitalized and the original cost will be de-recognized. So basically, suppose the company has incurred 5 lakhs initially on inspection, right? And company is required to get the inspection done after every 5 years. So 5 lakhs will be depreciated for 5 years, so 1 lakh each year. And after 5 years, what happens? A fresh 5 lakh will be recognized as an inspection cost, and the process will go on for every 5 years until the de-recognition of that entire asset. So this is how the replacement cost or the inspection cost works. So obviously, if the company has purchased an item of asset, PP or IP, at deferred payment credit, in that case, what happens? The company is required to recognize the cost at cash price equivalent. That means the interest portion is not recognized initially, but it will be recognized over the period of time, right? So the winding of interest will be done, and initially the cash price will be recognized as the cost of PP. Now we have understood the initial measurement, right? We have covered initial cost, subsequent cost, about the inspection cost, replacement cost, everything. Now we need to understand the subsequent measurement. That means at the reporting date, 31st March, what will be the value of asset? Is there any subsequent recognition, any subsequent assessment that needs to be done? So yes. So we will understand about Ind AS 16 and Ind AS 40 simultaneously. So as per Ind AS 16, for the items of PPE, there are two options given. First is cost model and second is revaluation model, right? And these two models are required to be adopted by the company as an accounting policy for a particular class of PP. So basically, there could be different classes of PP. For example, land and building, plant and machinery, furniture and fixtures. How these classes are formed? These classes are formed by identifying assets which have a similar use and nature to the entity. For example, suppose company has two buildings, right? One building the company is using for as a factory building, but the other building the company is using as an office building. Both the buildings have different uses for the entity. One is for factory and other is for office, right? So these two buildings will be a different class of PP. First will be factory building, second will be office building. But in case the company was using both these buildings for office purposes, in that case, both the buildings would belong to one particular class, which will be office buildings. Right. So class of PPEs needs to be identified on the basis of the nature and use of that asset for the entity. And accounting policy, either cost model or evaluation model, will be applied to the whole class. So suppose there are two buildings in a particular class. Now the company wants to apply cost model on one building and evaluation model on another building. So this cannot happen. The company will have to apply either cost model or revaluation model on both the buildings which belong to same class. Right. I hope this is clear to everyone. Now, on the other hand, in case of investment property, Ind AS 40 says that for subsequent measurement, the companies are allowed to apply only cost model. So this is a particular carve out from IAS 40, because Ind AS 40 is drawn from IAS 40, which is an international accounting standard. In IAS 40, there are two options given: cost model and fair value model. But in case of Ind AS 40, the standard says that the company is required to apply only cost model, but fair value will be disclosed in the financials. So for the purpose of disclosures, fair value is still required to be assessed and determined, but for accounting purposes, only cost model will be used. Now, what is cost model? Cost model is nothing but the initially recognized cost less accumulated depreciation less accumulated impairment losses. So this will be the carrying amount as on the reporting date. We will discuss the concept of depreciation later in this session. But for impairment losses, I can tell you that Ind AS 36 is a particular Ind AS that talks about impairment. So even Ind AS 16 uses the guidance of Ind AS 36 for the purpose of impairment. Now, what is revaluation model? Revaluation model is nothing but it says that after initial recognition, the item of PPE will have to be carried at revalued amount, which is what? It is the fair value of that asset on the revaluation date. Now, suppose the revaluation happens on 28th March, right? But the books close on 31st March. So the company is required to deduct 2 days of depreciation from the fair value. Hence, the revalue, as per revaluation model, the carrying amount is fair value as on the date of revaluation, less subsequent accumulated depreciation, less subsequent accumulated impairment losses. Now, as we discussed, the revaluation model or cost model will have to be applied on the entire class of PPE. Now, what will be the frequency of revaluation? So there can be a question on the frequency of revaluation. So let me just tell you, the standard recommends that when there is a significant volatility in the fair values, in that case, the company should revalue the assets on annual basis. But otherwise, if the fair value does not fluctuate very frequently or significantly, in that case, what happens? The company can revalue in 3 to 5 years. So this is the frequency of revaluation. So these are some different classes. As I told you, land and building, plant and machinery, aircrafts, ships, motor vehicles, furniture and fixtures, office equipments, and obviously the bearer plants, which are included in Ind AS 16. So the class will be determined on the basis of nature and use of that asset. So when the company is applying revaluation model, there can be some revaluation gains or losses, right? Because the carrying amount will be different and the fair value will be different. So how will the difference will be treated? In that case, what happens? When it is a first time of revaluation, that means the company is suppose it is 2019, the company has acquired a particular asset, say a building, and this is the first year, 2019 is the first year of its in the books of accounts. So on 31st March 2020, 19 for the year 1920, 31st March 2020, the company is revaluing that particular building for the first time, and there is an increase in the value. In that case, what happens? The difference will be recognized as a revaluation reserve, and it will be flowed from other comprehensive income. So let me just tell you that there is a concept of other comprehensive income in Ind AS which is not as per IGAP or AS. So this is a new concept in Indian accounting standards. So earlier, so basically in IGAP, revaluation reserve is recognized as a part of equity, but in Ind AS it will be recognized through OCI. So as on 31st March 2020, what happens? The company has recognized, say, a revaluation reserve of 1 lakh. But next year, when the company is revaluing, suppose there is a further increase, the value has a further increase of 50,000. In that case, what happens? The company will again recognize a revaluation reserve of 50,000. So the total revaluation reserve now is 1,50,000. But what if there was a decrease in next year? Right, there was a negative valuation and there was a decline of 20,000. Now in that case, what happens? The company will adjust the 20,000 rupees from the revaluation reserve of 1 lakh. But what if there was a decrease of 1 lakh 20,000? In that case, what happens? The company will first of all exhaust or use revaluation reserve. So revaluation reserve will be adjusted by 1 lakh, it will become 0, and rest 20,000 will be adjusted from PNL. So basically what happens is, first impact will be recognized, first upside will be recognized in revaluation reserve, and the subsequent upside will be recognized in revaluation reserve, but the downside will be first adjusted from revaluation reserve and the excess part will be recognized in PNL. Similarly, when there is a first time decrease, it will be initially recognized in PNL, but then subsequently when there is a further decrease, it will obviously will be recognized in PNL. But on the other hand, if there is a subsequent increase, it will be first adjusted from the PNL to the extent of earlier downside recognized, and then the remaining part will be recognized in revaluation reserve. Right, so this is a very simple concept of revaluation gains and losses. Now there are some cases when revaluation surplus will be transferred to retained earnings. So first of all, let me tell you that revaluation reserve is never transferred to PNL. It will be recognized directly in retained earnings when the asset is either derecognized, or also when the asset is used and the depreciation that is charged. So when an asset is revalued, there will be an increase in depreciation also, right? Because the value has now been increased. So that excess, the incremental depreciation, can be transferred from revaluation surplus to RE by the company. This is an option. This is not mandatory, but the company can transfer an amount equivalent to the excess depreciation that is charged due to revaluation from the revaluation surplus to the retained earnings. So the important point to note here is that the transfer from revaluation surplus is never made through profit and loss, but it will always be routed directly to retained earnings. Now let's understand the concept of depreciation. What is depreciation basically? Depreciation is recognized when the company uses the asset, right? This is a charge against the use of asset, and not just use, even though the asset is lying idle, right? In that case also the depreciation is charged. Depreciation is nothing but the allocation of the amount, the cost of asset after the residual value, which is called as a depreciable amount. It is the allocation of the depreciable amount over the useful life of the asset. Now, how do we recognize the useful life? What is the useful life? Now, useful life can be different from the economic life of the asset. Suppose the economic life of a car is 10 years, right? But when I purchased that particular car, it was already used by 4 years. So now the useful life for me is 6 years, remaining 6 years. right? So I will depreciate the cost at which I have purchased that car over the period of 6 years. And this depreciation is always charged to P&L as an expense until unless it is included in the carrying amount of another asset. For example, when we are valuing the closing inventory, right, in the cost of inventory, sometimes the depreciation of the manufacturing plant or machinery is charged in the closing value of the inventory. So when it is included in the value of inventory, it is not charged to the P&L. Now, when does this depreciation starts and when does it stop? So first of all, depreciation starts when the asset is available for use. And when does it become available for use? When the asset has come to a location or condition which was intended by management. As we initially discussed, the capitalization of cost stops at this point and the depreciation starts. Right. So the point that we need to look at is, when was the day when the asset became exactly as the management intended it to be operated, right? So when that asset has come to a location or condition which was intended by the management, that is the point of consideration. And when does the depreciation stops? The depreciation stops when the asset is de-recognized or is classified as held for sale under Ind AS 105. Now, this brings a point in consideration that depreciation does not stop when the asset is idle or is retired from active use. For example, there is a very classic example of COVID-19. Right, during the lockdown period, the companies were not operating, hence all the assets were lying idle, right? There was no production, nothing. So the companies were wondering whether we should charge depreciation during this lockdown period or not, because we are not using that particular asset. So the answer is, you have to charge depreciation even though you are not using that asset, but there is some wear and tear cost, some obsolescence cost, right? You have to charge depreciation in that case also. But there is an exception. So the exception will be discussed when we discuss the depreciation method. So there are three depreciation methods that are recommended by, that are talked about in this particular standard. First is straight line method, that we all are aware of because it leads to a constant charge. Then is written down value method, which is a diminishing charge, which is applied on the WDV of the asset. Then is the unit of production method. Now, what is this unit of production method? It is a depreciation method which leads to a charge based on the expected outputs. For example, the company has a machinery which is capable of producing 1 lakh units. Right. Now, as and when the units are produced, suppose the company has produced 10,000 units in first year. So the depreciation will be charged based on the 10,000 units. So during this COVID period, if a company is using unit of production method as a depreciation method for its assets, in that case, what happens? The production is zero. So if the company has 0 units produced during the lockdown period, depreciation calculation will obviously be nil, right? Because if there is no production, then the depreciation will also be zero, because calculation is based on the number of units produced. So this is the only exception. Otherwise, even when you are not using that asset, you have to charge depreciation. Now, depreciation method needs to be reviewed each year, and when there is a change in the method of depreciation, earlier it was accounted for as a change in accounting policy, but now in AS 10 also and in AS 16 also, when there is a change in depreciation method, it will be accounted for as a change in accounting estimate. Now, what is the difference between change in accounting policy and change in accounting estimate? That when there is a change in accounting policy, you have to recognize an impact retrospectively, Retrospectively means from the inception. You have to go in the past and calculate the impact and recognize, right? But when there is a change in accounting estimate, you can apply the accounting method prospectively. That means from the date of change in the future. You don't have to go in the past and recognize any impact, right? Now, obviously, the depreciation method needs to be consistently applied from period to period unless there is a change in expected pattern of consumption. And when there is a change in method, then it will be accounted for as a change in accounting estimate. Now, there is a very important concept in Ind AS 16, which is component approach, or you can say component accounting. So, as per Ind AS 16, each major part of the item of PP, the cost of which is significant in relation to the total cost, is required to be depreciated separately. Now, basically, when you are applying component approach, you have to look at three things. First is the significant cost. If a part of PPE has a significant cost in relation to the total cost, you have to depreciate it separately. Second point is, as we discussed earlier also, when there is a part which needs to be replaced and there is a replacement cost associated with this, you have to depreciate it separately. And also, when there are different parts of an asset and different parts have different useful lives or depreciation methods, in that case also you have to depreciate them separately. But there is one concept that when there are two significant parts and both have same useful life and depreciation method, in that case you can depreciate them, you can club them as a group and you can depreciate them together. So these three things needs to be kept in mind when you are applying the component approach. Now, obviously, there are some estimates involved in recognition of asset, which are useful life of the asset and residual value. So these two components needs to be reviewed at every year end, and when there is a change in these two components, will be accounted for as an accounting change in accounting estimate, and the accounting will be done prospectively. And obviously, whatever the change happens, the depreciation will change in future based on the revised useful life and revised residual value. Now, here's a small concept of land and building. So basically, when land and building are acquired together, right, there is a problem. Why? Because land has an indefinite useful life. So you cannot depreciate land. But building has a limited useful life. So you will have to depreciate building over the period of useful life. So when you acquire land and building together, you will have to account for them separately. Now, how do we account for them separately? You will have to allocate the total consideration, total price based on the fair values. And accordingly, land will not be depreciated because it has an unlimited useful life, but building will be depreciated because it has a limited useful life. But also, if land has a limited useful life, for example, there is a particular agreement as per which the land can be used for a particular limited useful for limited life only, for a limited period only. In that case, the company will depreciate it over the period of that particular period. Now, suppose the land includes a component of ARO, the asset retirement obligation, right? Because suppose Reliance has a particular land, and the land is used for mineral resources or maybe some extraction purposes, right? And as per the agreement, the company is required to restore that particular land after the expiry of the term. In that case, what happens? The land is not depreciated, but that particular dismantling or the restoration cost, that cost component will be depreciated over the period of benefits of that cost. So this is the concept of land and building. Now, there can be some cases when companies switching the use of a particular asset. For example, there is a building that company was not using earlier, and the use was not determined, right? So the classification was as investment property. But then later on, the company started using it for own purposes. It became an owner occupied property. The company started using it as an office building. Employees are sitting over there. So it classified it as PP. But then later on, the company started a business of renting out properties, right? So it became inventory. In that case, what happens? How will the transition happen? So you have to keep in mind that the carrying value of that asset, of that building, does not change. It will be deemed as cost for every particular classification. Even though investment property is becoming PP, the cost will remain same. And even though it is becoming inventory, the cost will remain same. The only thing that changes here is the classification, right? Investment property becomes PP becomes investment property, and so on and so forth. Now, the last part of this particular session, the retirements and disposal. So, as we discussed earlier, also that the depreciation is charged till the disposal, or when the companies classify the asset as held for sale. Right now, what is disposal? The company is required to de-recognize a particular item of PPE or investment property when it has disposed of. Disposed of means either it has sold that particular asset, or it has entered into a finance lease. As we discussed at the initially, that even when a company has given an asset on finance lease, it is required to de-recognize that particular asset from the books, right? So it is construed as disposal. So the company can dispose an asset either by selling it or by entering into a finance lease, or when no future economic benefits are expected from its use or disposal. In that case, also the company is required to de-recognize the carrying amount. And what happens when there is a disposal or there is a sale, and there is a difference between the uh, disposal proceeds, or the you can say the sale value, and the carrying amount? In that case, the difference is recognized in P&L as gain or loss on derecognition, and mind it, it is not classified as revenue. So this was the entire concept of Ind AS 16 for property, plant and equipment, and Ind AS 40 on investment property. So if you have any doubts, then we can discuss. Otherwise, um,
Thank you very much, Chandni ji. Thank you very much. Friends, I have also given you one link in your chat box of YouTube. In that, I have also given the material provided by the ICI in a link. It is kind of guidance note and complete material on PPE basically. So that will also very useful to you, because sometimes we stuck some FAQs and some more analysis we require when we are actually doing implementation and conversion of Ind AS. Because sometimes attending a session will not provide you full-fledged practical knowledge. Although we Chandni tried to complete each and everything, including the judgment part, conversion part, and the transitional period, many things she has covered. But still, you have any kind of doubt, you can refer that material made by the ICI, because once Aloki told that material of ICI is also equally good while referring Ind AS. So I have provided you a link in the comment section. You can refer that. And still, friend, you have any doubt for today's session, you can directly write in the comment section. We can take the doubt right now, or in later on also, friend, you have any doubt, because this video is not watched by all live. This video is also watched by some at YouTube also. So in future you have any doubt, you can write down in the comment section, and I will definitely try to get the answer from Chandni and reply your query. Because currently also in our past session we are getting some queries, and I try to contact the speaker and try to arrange the answer. I also disturbed Chandni many times to get the answer of some India's question. Recently I was asked some the applicability question from her, and earlier some other question I have asked related to leases. So friend, there is no hesitation asking any question, because somehow I feel that whenever we are in a practice, or whenever we are in a, such a assignment kind of a professional job, so things are very dynamic and things are changing in a very faster manner, and it is very difficult for all of us to get expert in all the areas. Somehow we need the expert like Chandni, who can guide us and mentor us on the expert areas on which those in which she is working extensively. So she has a India as a area of her core knowledge and expertise. So definitely she will help us in the matter of Indias. Not only for this in Indias, she has a very good command over other Indias also. So you have any kind of doubt, you can contact Chandni also, because Chandni is also given her number and email ID at the last slide, or you will also get the slide by downloading from the comment section. You can also contact her directly, or if you have any doubt, is you can get your query resolved through me also, because currently I am not finding any kind of query, because session is very self-explanatory. So most query I think we found on the comment section. So later on
Yeah.
you can ask the queries also in the comment. I will try to provide you the answer. So with this note, I express our sincere thanks to from the entire team of Association of Professional to see Chandni Gupta for coming and taking session with us, and all the participants, those who have joined us in live session or those who will see this session later on. Friends, I request you kindly like the session and share with your other friends also, because sometimes we are stuck somewhere and we are looking for the help. And if by sharing your this session with others will solve the issues and problem of other, there is nothing like that, because sometimes I also stuck somewhere and need to revert client on the urgent basis. So at that time I just try to call somewhere and try to find the person who can help me immediately, because sometimes we don't have time to study in data analysis, and sometimes we are failed to understand where to study exactly. So these kind of issues can be solved by the referring our friends. So I request you kindly like the session and share with your other friends. And as much as you will share, knowledge will share, and it is the ultimate purpose of all the professionals. As much as knowledge we can share, it will be benefit for all. With this note, thank you very much, Chandni ji,
Thank you
for
so much,
coming.
sir.
Yeah,
Thank you so much for inviting. And I want everyone who is viewing this particular session to stay tuned with sir, because he keeps on organizing such amazing webinars on different topics which are very relevant for today's understanding, and for all the professionals and students as well. So I request everyone to stay tuned with sir. And I hope today's session was also useful for you. If you have any queries, you can always reach out to me or sir, and we will try to help you in every way possible. So thank you so much.
Thank you, Chandni. I also want to hear around daily. I got 20 to 25 query daily basis on different matter, and it's some kind of my hobby to resolve the query before the day end. Or this is the thing which I am doing from last 15 years, I should say, because before passing my CA course, I used to sit in CA library and study and try to resolve the query at that time also. So it's somehow my hobby to share the knowledge with the other people's and somehow to resolve the queries. So it's become somehow passion for me. So
This is
whenever I
very nice.
get any kind of query on email, WhatsApp, telephone, at least 7 to 8 call daily. I am receiving that this kind of calls daily, and through email or WhatsApp around 20 to 25 queries I generally try to resolve. And that things also refresh my knowledge also ki yaar, this can be perspective, this can be thing. As I discussing with you yesterday, the applicability part, generally I always think Ind AS for the upper to lower part only. Never think
Right.
about the from lower to upper part. So
Even
this is
that
the
thing that I told you, I was also actually assumed. I assumed that it was for from that perspective only.
yeah,
But then
because
when you ask me again, then I look at the
yes,
question carefully, and I was like, oh, okay,
because
that's
what
that's
actually
what it is.
happened generally, parent company or holding company are the larger company, and India's applicable on them is a sooner as compared to
Right.
the associate or the subsidiary company. But
True.
sometimes we have some kind of investment in the associates company, and those are much larger than us in the
Right.
quantum, in the period, about many things. So this kind of perspective can become in the knowledge. Although I have read this MCA circular many times, but I
Hmm.
never read for that point of view.
Right.
So
That happens only when there is a query or any question
yeah,
or
yeah,
practical issue stuck.
because
So,
every person see the things in a different angle.
right.
Because I still you want to believe, Chandni, section 44 AD of Income Tax Act, it incorporated in year 2020 2012. So around there is more than 8 years, but still I generally refer twice in a week. मतलब हफ्ते में 2 बार तो सेक्शन मुझे रेफर करना ही पड़ जाता है एग्जैक्टली क्या लिखा है वहाँ पे, कुछ मिस तो नहीं हो गया, क्योंकि जब कोई क्वेरी आती है तो उसको दोबारा पढ़ना पड़ जाता है उस चीज को बेसिकली. So this
Same.
kind of things, so everyone has their different kind of habits and hobbies. So solving
Absolutely.
queries is my another hobby.
This
And
is
for
wonderful, sir, because I think in today's time, people are actually looking out for someone who can solve their doubts on real time basis or very quickly, and they're not able to find someone. So this is really amazing that you are doing such an amazing job, and obviously you are connected with a lot of experts in the field area. So you will always provide a solution which is up to the mark. So I request everyone to please stay tuned with sir. I mean, this is very useful, and for students also. I mean, this is really nice.
yeah, so Chandni, we did one more thing that on every Wednesday from 12 to 1, we
Mm-hmm.
have organized a live query solution session
Arey
at
wow,
Zoom. Or
that is very great.
today we held our sixth session, and
Okay.
we'll try to go do this kind of session on weekly basis on every Wednesday 12 to 1. So in that we have a team of expert and take the queries of all the participants. So
Wow.
whenever you get a time, you come and also join that.
Definitely,
Okay,
definitely, sir.
and that is also give very much pleasure to solve the queries of the person, because sometimes people have a very
Basic query.
notional and basic query, and sometimes there's notional query also bound you to think over that key or what I have to revert on that.
Right,
So
right.
this is the funda of that. So friends, I will not take you much time, although I understand today is working day and time is very precious for all of you. So with this note, friend, thank you very much for stay tuning with us. Now I am signing off. Stay tuned. See you day after tomorrow.
Thank you.
Okay, bye. Thank you
Bye.
very much.